Hello everybody and a warm welcome to our Wednesday evening webinar presented by Admiral Markets. It's a great pleasure for me. Sorry for the delay because we had a little bit technical issues about the GoToWebinar. So I'm so very sorry. But now we are here, we are on track and audio and video okay, Vincenzo. Thank you very much. So I guess everybody can hear us and you have a great picture and everything is fine right now. So we can start in our Master the Markets webinar presented by Admiral Markets on our Wednesday afternoon, Wednesday evening. So guys, I hope you're doing good and you had a great week up to now. And I hope everybody were able to stick to the rules and to be disciplined. And I hope that really because sticking to the rules is the only way to be successful in trading on a long-term distance. So guys, let's go through the first slides this morning. I am very grateful that that so many people here this evening. And you know, I'm a German guy and my English is German as well. But I make a lot of efforts to getting better and better from week to week and to extend my vocabulary. And if you have any question, please feel free to type it in the chat box. It's your webinar. So I'm not important in that part here. I'm only the guy who wants to tell you how you can be successful in trading on a long-term distance. Okay, guys, let's start. And sorry, my great thank you from my partners from Admiral Markets for opening this webinar. Greetings here from Germany. Okay, that's the risk disclaimer. If you are a beginner, please start with a demo account to reduce your risk and to be free from emotionally trading, so that you can focus on rules. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. You know that everything. Please write it by yourself. And we know risk disclaimer. We had since August 2018 we have the regulation about the European Union, and we have to differ between retail clients and professional clients. That's the point. We have to rise up the margin from DAX, for example, from 600 up to $3,333 respectively euro. So you can choose if you want to be a retail client or a professional client. For a professional client, you need specifically circumstances. Why we choose Admiral Markets as a partner? I'm so happy and I'm so grateful that I have the permission to work with Admiral Markets here in this English webinar, because we have the best index offerings in the DAX 30, for example, typical spread 0.8 points during the main trading hours, and of course no minimum stop distance is really important for our kind of trading. And Admiral Markets is not a German broker, it's worldwide with one world global offers around the world, and now start into our how should I say, trading. And you know, that's our first slides every week. Success, guys, is not a fantasy, it's a formula. And one of the easiest trading approaches is trend trading. And as Dow Jones once said, we have to trade outcoming of the correction. Out of the accumulation phase, it brings a high probability of almost 72% of probabilities. That's enough to make money, and we will find. If you make sure, guys, that the big picture is supporting you by a trend, that you can make outcoming of the trend your trades, or you have a divergence on the upper or the lower side, it's one of the strongest technical signals in trading, or you have a great support or resist close to the current price, then you can assume that you can make in your signal chart, that's the big picture, in your signal chart, that you can make your trade in the same direction. But, and that's the point, we have to stick to the rules, and that's our rules. Rule number 5 to 7 is, where are you in the market? Where? Don't forget the big picture always, that you have a surrounding always in your mind, so that we have an entry outside of the fair value zone. That means that we are outside of the fair price, that we can go back to the fair price. One exception, you have the correction at the point of control, high or low. And about the targets, Fibonacci and market profile will help us there. And the big picture, as I showed you, the 3 templates. And rule 1 to 4 means how you can get in your trade. Valid trend is needed. The majority of the trend, you need to have a young trend. Then outcoming of the correction, so that means you need a correction at least 38% of the last movement, of course, and then wait for the rebounds in the correction zone. And here helps you Heikinashi helps you here by showing you a balance candle. That means a lot of calm and patience, and then you can make your trades. Switch to the markets right now, guys. And so type it in the chat box, guys, if you have any questions. And Master the Markets webinar, we want to close the gap between education, theory, and practice. That's really important. And so we want to talk about the markets today, and I have a special topic this evening. I want to show you how you can recognize in trading the 3 trend sizes: big, medium, and small. And that is a special topic for this evening. And let's go on. So we have a working trade in Aussie Swiss franc, for example. And you see, I always stick to my own rules, of course. I want to draw it for you. Look at this one. We had a trend, movement, correction. That was our trend. Then we had here the correction, and the correction ran around 78%. Then we saw here our balance candle, great stuff. And then we got inside of the market. And now the correction is a little bit in a sideways phase, and the correction extended a little bit on the time frame, more on the time, and in a sideways phase. But as long as it doesn't break the 0.3 here, we can expect that the trend continuation is always likely a trend break, and the first target or the special main target is placed at the point of control. Yes, I love this indicator, Heikinashi, because it's really easy. I'm a trend trader, and I don't know so many, so many candle patterns and so on. I need a trend continuation candle and a balance candle, no more, no less. And I love it if I can see it in a correction zone that I have a balance candle. It shows me, okay, the correction maybe comes to an end, and the trend continuation is more likely than a trend break. So that's the one working trade right now. And since yesterday, guys, we prepared it last week on Wednesday, because we opened this, we talked about the Swiss franc, Japanese yen, a lot of 2 or 3 weeks ago. And you could see we have a trend. And we could see here, look at this one. We could see here the trend, the correction, and here was, let it draw it for you. Look at this one. Here was our balance candle. Look at this one. Movement, correction. With that movement, we had a valid trend. Then the correction, at least around about 61% of Fibonacci retracement. And then on the balance candle. And normally, we don't make trades inside of the fair value zone. You know it. But we had one exception. If we have a trend, and if we can see that the correction ends in direction, of course, of the trend, at the point of control, high or low. And in that point, we can see that we have a correction. And this correction ends exactly at the point of control. And then we can assume that we have a trend continuation. And what happened? Look at this one. We had almost So let me draw it for you and then you can see it more. Look at this one. That was the movement. And here you can see, first of all, look at this one. Look at this one. It's really easy. Rule number 3. How far must the correction run? At least 38% of the last movement. So you could see we had at least almost 86% of trading. And now that was in my Dow Fiber Pro approach. That was blue to blue or respectively green to green. And you can see here from 86 up to 72, extended Fibonacci version. First target reached, get it out, and the rest, the market will decide how much money we will get. So how much money we made here, you could see here, the price, the entry was 110 Japanese yen 33, and the first target placed 64. So we made round about 30 pips, because we are pip hunter. We want to count, we want to collect pips. So how much money you could make there? So you see, one lot with one standard lot, you were able to make one standard lot is around about $10 or 10 euro. You could see 300 euros with one trade, with one target. And if you have a mini lot, so I had a mini lot, yes. So then is 1 pip, 1 euro, and you know that was 30, almost, yes, 30 euros, a little bit swap and costs, of course. So that's the point. So we make money in the market. We collect pips in our, and based on our rules. So, and now that's now it's a question of trade management now. And that's the point where so many traders failed, because people have an expectation to the market. Too many expectations to the market. Oh, Swiss franc is so strong today, or is so weak today. Let me tell you something. The market doesn't matter about your opinion and my opinion. We are not important enough, or otherwise you have enough money on your account, the billions of dollars. Then you can then you can have an impact to the market. If you have not that kind of money or that amount of money in your account, then you have to stick to the rules. Your opinion is not interesting for the market. The market doesn't care about your or my opinion. So let the market decide how much money you will get from the market. So you could see the stop is placed below the 0.3, very close to our entry. So at least we will lose maybe 10 pips or 5 pips if the market will go back and will stop us out here below the 0.3. So, but never intervene into a trade. Never. Let the market decide how much money you will get. Maybe we will see a trend continuation. Let it go, Forest, run. Okay, that's Swiss franc, Japanese yen, for example. We prepared some other Aussie New Zealand dollar, but you can see in that case, we said the daily chart, maybe we will see a support here. It doesn't work because we had really falling prices in Aussie. We had a really weak Aussie dollar at the moment. So you can see we hadn't a chance to make an uptrend here, but it's not over. We are very far away from the current point of control. So let it on your watch list for Aussie New Zealand dollar. So Alberto, should one sell Palladium now, or would you expect that it continues its uptrend path? I don't know. Stick to the rules. I don't have any opinion about any markets around the world. I don't care about any underlying. Look at your chart. Do you have a trend? Whatever. That's the rules. So Then Aussie New Zealand dollar, the same procedure. We have here we see the support works here right now. And then we can think about the long trade in the hourly chart. But as you can see here right now, we had a trend, but a very less correction. Then the trend broke here again, and actually we don't have a valid trend. So we have to wait, cause and the worst case, we are already among the red zone. So you can put it down or you can quit it from your list. Aussie US dollar is no more important. So Euro British pound, we said in daily chart, you can see the stabilization here around about, well, so high volatility about the Brexit discussions. I hate it in between right now, but you can see it wasn't possible to make a trend here. You can see it's up and down, up and down, up and down. So it's a fucking chart. Forget it, but let it on your watch list, because maybe we will see very soon a trend and we can go up to the point of control. Same procedure you can see in British pound Aussie. We want to go down back to the point of control, but you can see the resist works here at the higher point at 1.8772, but high volatility with no chance to make a trade here. You can see it's not possible to make a trade here. It's unbelievable. So it's let it on my watch list. Maybe we'll see it very soon. So then British pound US dollar, maybe the same. We are around the point of control, you see, and this is not the worst chart. You can see we are around the point of control. That means we have a fair price. No more, no less. It's a fair price. Let it go at the point. Let's switch to the hourly chart. And here you can see we cannot make a long trade here, because you are very far away from the point of control. To make a long trade, we need a price at the point of control or lower, but not in an unfair value price and above the point of control. There's forbidden to make a long trade there. But maybe you can make, sorry, was that the right one? Yes, that's the hour. No, just here. What's up? Here we are. That was the wrong. So that was the DAX. Jesus Christ. So that's the cable, British pound, US dollar. So you see it was not possible here to see a trend, and the trend is rule number 1 to make a trade. So now we don't have a trend and we are among the red zone. No trading idea here. So let's see a little bit. Let's switch to Palladium. I will see if I will found that. So let's see if we'll found that. Where is it? Spots, cash, Palladium. I have to switch to, I don't know, where is it? Spot energies. Spot energies, natural gas. Okay, that shares, not interesting. Okay, I guess I don't have a Palladium here in at Mirror Markets. No. Spots. Yes, here we are. Palladium. Yeah, great. Let's see. So, first of all, daily chart. And here we go. Oh my God. Should one sell Palladium now, or would you expect that it continues its uptrend past 1550? I don't know. I'm a trend trader, Alberto. I'm an absolute trend trader. And first of all, I can see we are very, very far away from the point of control. We are, and the next point, that's the first point. Next point, we have an uptrend. And there we are very far in the move. And you can see we have a little bit correction, very small correction here right now. It's not healthy. A really healthy correction runs at least 38% to 61%. I guess we will see here a double bottom, a double high, maybe a divergence on the upper side. It's really difficult because there's no volume above 1572. It's an imbalance zone. So we have two options. Either we see the next correction to the lower side, but no trend. So I wouldn't make a trade there. Or we see a trend continuation to the upper side. Then it will a great break up because yes, a break up because we have an imbalance zone with no volume there. So that means that a lot of buyers will come into the market and they won't forget, they won't miss the continuation of the trend. So I wouldn't make a trade there. I wouldn't make. If you are involved in long, so trail your target, trail your stop. But I wouldn't make a short trade. Why not? Because it's a trend. It's an uptrend. So I wouldn't make a trade there. And because we have rules. Please avoid to have an opinion to the market. Please avoid it. It's not helpful. The market don't care about your opinion or mine. The only way to survive in trading is rules and discipline. That's the only way. And that's the point what we are doing in our DAO family. So you can switch to my homepage if you want, DAO-trading.com, and there you will find special offers for us. And if you open a new Admiral Markets account, a live account, then we can have a special offer for you. But for that, you have to call me or you have to send me an email. Then I have a special offer for you because you have to apply to me. Because I only work with people that want to be successful, not gamblers. Okay, that's my point. Let's see a little bit to the market. Let's switch to maybe DAX for a little bit outlook here. DAX 30, you see, we are on track back to the point of control. A very strong trading day today. You can see in 1 minute, really far away, really very strong today, and we see a stabilization at a high level. In daily chart, you can see we are among the red zone. We have the support from the point of low, and we are on track back to the point of control. The same thing we see in Dow Jones. We have now, you see the trends, you see the correction. Unfortunately, among the red zone, we don't make trades in the red zone. One exception, you have the correction exactly the point of control. You see, like that. That one. And here you see we are fighting with the point of high right now. If we will see a break up, then we can assume that we will see the next trend continuation to the upper side. The market is actually really strong. Oh, you are in Palladium since $900. That's great. Let's switch again. I have to see that. That's very exciting. Since 900 roundabout. Okay, that's here. Okay, that was among the red zone. It doesn't matter. Okay, I would trade my stop. And latest $2,307 maybe. And if we will see a trend continuation, I would trail my stop below the last 0.3 here. So maybe, but it's really, that's great trade. I hope it was based on rules, not your opinion. Then, cause the point is, what do you do with your consciousness? That's the point. What do you teach them? Because now you believe, oh, I'm right. I can do it again and again and again. That's the point. It doesn't work. Not in trading. That's really important. If you want to repeat it, next time it won't happen. And that's the problem. Because either you have some special information, maybe, or that's otherwise. And on the other hand, then it was an accident. And you cannot repeat an accident. It's only my opinion, of course. I'm happy for you that you have such a great trade, but it makes no sense if you have one trade like that, but you cannot repeat it. That's the problem. And only you have rules, statistically proven positive rules. You can repeat it and repeat it and repeat it. Then you can survive on a long-term distance in trading, but not about on an accident. But great, really great. I'm really happy for you. And about a little bit, I'm really proud of you because it's a long time. Because $900 were around about where we are here at that was last September. My God, that's a long time. Great stuff. But make sure that you can repeat it based on rules. It's only my opinion. Okay, let's see. Brent. If you have rules, great, and everything is fine. So Brent oil, you see, we don't have any chance because we are among the red zone. No trading idea there. Same procedure in WTI. We are among the red zone. That makes no sense to make trades there because it's a fair price already. No trading chance there. And Nasdaq, for example, you can see we are a little bit breakout about the point of high. Now we are in a trend continuation. You can see the best opportunity where here you can see movement, correction, then you can see the stabilization at the point of control or very close. The point of control were at that time a little bit lower here. So at the point of control, and you see a trend continuation, guys, is always more likely than a trend break. So trust the trend. Always trust the trend. So, any new trading ideas? I don't have anyone on this placed below. Aussie New Zealand dollar, so no new trading ideas here for that week. That's the reason I want to show you the following thing about education. I want to show you one of the tenets of Charles Dow was that we have three trend sizes: the main trend, a medium trend, and a small trend. At the time of Mr. Dow, the small trend wasn't important. He only was looking at the main trend. Where is the main trend? Which direction is the main trend placed or facing ahead? So let's see, and I want to show you can recognize in every trend, if you have enough history, what is the main trend, what is the similar about the medium trend, and what is the small trend. So let's use maybe Euro US dollar, for example. Let's see. And we want to use hourly chart. So we need a lot to see the main trend. The big trend, you need a lot of history, and then you can try to draw. So let's see. I want to show you that you can recognize the main trend. I will show you. Let's start here. That's the main trend. Look at this one. Movement, correction, and you need, for a trend continuation, don't forget, you need a close below the last point. A very clear close. You can see. So no close there, only spikes. No close there, only spikes. And you can see you have to draw it in that way. So then for a trend break, you need a close below the last point 3. So there was the close here below. So the trend break was there. Then you can draw a new trend. That's the main trend, the big trend. And you can recognize in every chart. If you have enough history, you always can recognize all three trends: big, medium, and small. So to recognize the big trends, you need the full history of your chart. So you can try it in that way, you see, and I will tell you a secret. Use symmetrics. Look at this one. Movement, correction, movement, correction, and movement. So now, how you can recognize the right trend, the correct trend, which one fits to the other? That's really easy. No, it's not easy. It's a question of experience and watching thousands of charts. But I want to show you. Look at this one. Use symmetrics. Use the first high of the use the high of the first correction zone, and then copy and paste. Then you can see copy and paste maybe in that way. Let's see. No, that's can I copy it? No, not here in that way. No, that's not. But you can see, look at this one. And now that's the high of the first correction zone. And if you recognize the next trend, if it's the correct trend, you see that's the same high. This is one. Look at this one. Can you see it? It's almost the same high here. Look at this one. And now you know, look at this one. That's the same high here. You can see? Now you have the big trend. In that way, if you compare the high of the correction zones to each other, you can recognize the trends, even the big one, the medium, or the small. So that's the big one. So, and now you see, actually, you are in the correction because you had this movement and now you are in the correction. And if you want to see or to guess how far or how big the correction will be, use the symmetrics. Maybe this one. You draw here, and maybe you use it this one, roundabout, same high. You see, that's the same high. Then you can expect how far the next correction will run. Okay, that was the big trend. You can see to see the to see the medium trend, you have to scroll in, to zoom in the market. So let's see, a little bit zoom in the market. That's enough. So you see, let's see the medium trend. I will paint it for you. Let's see. Here, let's see. You start at the highest point. Movement, correction, movement, correction, movement, correction. Now see the last, and now you have, look at this one. To, let's see if I can do it in another way. Just a moment. So that's the first high. Let's see if I can copy and paste. Let's see, can I copy and paste? No, I cannot. Okay, then I have to use that way. So, use that one. Movement, correction. So now you see, that's your first high of the correction zone. That's the first high. Now draw it, the high of the correction zone. Use that one. And if you want to figure out where is the trend continuation and where fits the trends to each other in that medium trend, make copy and paste or draw it and look at this one. Where do we have the next high, the next similar high to that correction zone? Where is the next high? Look at this one. Is it this one? Not really. It's not high enough. Is it this one? Maybe it's not. Is it this one? Maybe this one. Yes, maybe. And now you see, and that was the correction. Look at this one. You see, that's the same high. That's like the first one. Maybe it's not always exactly, but in that way you can figure out where is the trend who fits to each other, to that trend size. That's really important. So then you can try to draw it in that way. Movement, you see, the next high, it's a similar high to the first correction zone. Then draw it in that way, and then you can see that's the medium trend. Then you can draw it in the next way. Look at this one. And then you can see there's the trend break. There's the trend break. So then, if you want to see the next trend at the same trend size, medium trend, draw or copy and paste of that correction zone. You draw it to first. That's the template. Yes, that's the template. So let's see. Okay, maybe is it this one? Oh, that was the wrong side. So maybe is it this one? So that's maybe the same high. And now the next correction. You see, that's the correction. It's a little bit higher than the first one, but almost. It's a little bit difficult. So you see, then you can start to draw the trend, movement, correction, movement, correction. You see, it's the same trend size like we started here at the highest point. That's the way you can figure out which is the trend, which is the medium trend. If you use the symmetrics of the trend highs, of the trend size, the correction sizes. That's the point. What is the time scale on your daily? It doesn't matter. It doesn't matter. That's the hourly chart. You can make the same in daily chart. Doesn't matter. In every chart, in every time frame, you can see the big or the medium or the small. We can use it in 1 minute as well. So if you want to see the next medium trend, because you see that we had a trend break here. You can see there was the trend break. And now use the symmetrics again. Use it again. And you see, okay, that was, Jesus Christ. That was here, the next correction high. You see, it's almost the same like the first one we started here above. And then try it again. Where is the next one? Where is the next one? Not here. That's too small here. That point. Everything is too small here. Maybe we see here. That's the next correction. You see, it's almost the same like this one. Then you can try to start that you can draw. Look, this one, movement, correction. Then you have to go down here, because on that distance here, you don't have a trend correction in the same size like the first one here. That's the template you have to use. In that way, you can recognize which is the leading trend. So that was the medium trend. Let's use the small trend. So we have to zoom in, and now you can recognize the small trend. Look at this one. Start with the first at the highest point maybe. So let's see. Movement. Correction. And now it's really important. You see, for trend continuation, you need a close below that point. Do you have a close? No, you don't. So then you have to draw it in that way. And now you see that's the first correction zone. That's the size of the correction zone. You look at this one. So, and now you can draw it again. Copy and paste. So let's see. Fits is here? Not really. Does it fit here? In that high? Maybe. But it's not possible that it fits always exactly. So, but in that way you can recognize it here. So, movement, correction, movement, correction, and then you have the sharply decreasing here, the sharply falling prices here. That's the trend. That's the small trend here. And now, look at it, we do start again to draw. Start at the lowest point. Look at this one. Movement, correction. And now draw the correction zone. You see? As a template for the next one. So where's the next correction? Look at this one. Look here. Is it here? Maybe it's almost the same. Almost. It doesn't matter. It doesn't fit exactly always. So next one, maybe here. It's a little bit higher, but maybe. So next one here. Next one here. Next one here. You see? Next one here. And you see at 1, 2, 3, 4, 5, 6, 7. That's the template maybe here. And it fits almost 1, 2, 3, 4 times. And in that way, you can start to draw your trend. You see? Movement, correction, movement, correction, movement, correction, movement, correction, movement, correction, movement. You can see it's amazing, guys. And that's the way how you can recognize in every chart the 3 trend sizes: big, medium, and small. And beside, what can you realize? What's the right word? Jesus Christ. I told you every week, what's the most important thing? Trend and price. Trend and price. And as you can see, guys, a trend continuation is always more likely than a trend break. Of course, Vincenzo, volume, of course. Trend and price, volume. But first, the trend. And you can see it here. A trend continuation is always more likely than a trend break. You can a little bit zoom in. So look at this one. It's always the same procedure. It's always the same. Look here. Maybe start here. You can see movement. Or this one. Movement, correction. So now draw it as a rectangle here. The template, the first one. And then you can see. Next one. So, and then you have a trend break here. You see it. Here you have your trend break. And that was your trend. That was your previous trend here. Movement, correction, correction, movement. And then you had the trend break here. So, the trend break means you have to start again. But the template you have to use, it's always the same. It's always the same. Look at this one. Next correction. Okay, no trend break there. Next correction, it's a little bit higher. But always the same. Look at this one. Next correction. Next correction. Always next correction. You see, very symmetrically here. So look at this one. It's amazing. It's always the same. And if you go down, it's always the same. Look at this. That's the trend. Look at this one. It's always the same. It's always the same. And in that way, you can draw your trend. Movement, correction, movement, correction. And you can start from a new movement, or here one new movement, correction, movement, correction. You see, a trend continuation, guys, is always more likely than a trend break. That's the point. And you can draw it in another way as same. Look at this one. Movement, correction, movement, correction, movement, correction. You see, it's not a rocket science. It's only a question of experience, guys. So, and with that education, you can close the gap and you can recognize a big trend. Where is the big picture? You don't have to switch in the daily chart. If you have the hourly chart, for example, look at this, we have the hourly chart. And if you have enough history, with enough history, you can see, oh, that's the big trend. Look at this one. That's my big trend. And that's the trend here in daily chart. Look at this one. Maybe you look, movement, correction, movement. And here we are. Here we are in the correction. And if you would switch to the daily chart, you would see the same here in the last one. You can see, actually, you're here, back here, you can see. Let's draw it in that way. So, movement, correction, movement, correction, movement, correction. That was the same you saw with history in the hourly chart. You see, it's always the same. And especially look at this one. It's amazing. In daily chart as well. Look at this one. That's your correction zone. That's the correction zone. Painted in the same way. It's almost the same. Look at this one. That's symmetric. That's symmetric. Absolutely amazing. So in that way, you can draw your own trend and you can recognize which trend do we have right now. Movement, correction, movement, correction. You see, a trend continuation is always more likely than a trend break. It's not a rocket science. It's only experience. No more, no less. In that way, you can recognize every kind of trend in every chart. That's all. We want to continue next Wednesday to make more experience that way. Maybe you can make your own exercises at home. Try to figure out the big trend, the medium trend, and the small trend. And if you want, we can talk about next week again with it. I hope you learned a little bit in that way, and I hope you are satisfied with me. Maybe you will send an email sometimes to Admiral Market if you are satisfied with my with that webinar. It would be a great pleasure for me. So guys, I wish you a nice evening. Thanks for your lifetime, and yes, never forget the most important thing in your life, your friends, and every other thing, but not trading. Be careful about your thoughts, because they are the beginning of your actions. Thank you very much. Bye bye. Take care and enjoy the rest of your day.